Hi everyone, welcome to another episode of the charting video. Once again, my name is Wei Ren, market strategist from CGS-CIMB Singapore office, and today I'll bring you on the charting journey from now on. So the topic for today is on the US market. The reason being, as the fear of the US recession looms, the S&P 500 has been falling since the start of this year in the year 2022. So today I'll be using the charting and wave analysis to determine the long and mid-term direction of the S&P 500. So without further ado, let's go. So looking at my chart, this is a monthly chart. So diving into the 2-decade worth of historical move, we could see from the dot-com bubble all the way to 2008, the great financial crisis. We have been in a larger true wave correction labeled in A, B, and C. So any upside move all the way from 2003 all the way to 2006 and 7 is actually on a corrective move. So right now, after 2007, we can see that after the four bear stearns and after that Lehman Brothers in September 2008, you can see that there's a huge fall, dipping below all the way to the low below 764.13 support level. However, on the March of 2009, we could see a rebound actually happens. So diving in, we could see the 5-wave primary wave has been completed for the last over the last 10 years, with some interruption during 2018 all the way to 2020, where we can see that there was a ABCDE 5-way expanded wedge, okay, we can label it as 5-way expanded triangle. And subsequently, after the COVID sell down in March 2020, we could see another bullish move up, penetrating all the way above 4,000 and terminating at above 4,000, terminating at 4,008 psychological resistance level. We are some like 200 points short of 5,000 points, but in the end, the market of the S&P 500 decided to have a correction. And based on the wave theory, we believe that any upside right now, we are going to see a wave B, a corrective up move before we coming down to form the next wave of wave C before embarking another next wave of the uprise again. So looking at the wave theory and based on the technical analysis, we could conclude that 3471 and 2749 will be the next likely support level that we should be looking at. Of course, 2749 may be far-fetched, but we just want to have a worst case scenario and place our next support level over here. So these are the two levels over the long term we should be focusing on. So moving on, we'll be diving more on the daily chart, as the daily chart shows more of the mid to short term correction that we are going to see and what's the potential next move that we can take advantage of. So diving into the wave analysis of the S&P 500 daily chart, we can see that the bearish depth plots have been formed, and right now we are in a bearish trend. Labeling ABC a fractal kind of corrective wave, we can see that we are largely in a WXY corrective wave, and having this complex corrective wave actually means that we are actually in a very strong bearish downtrend and a possible extended and a larger form of corrective trend going forward. So we can see that we could conclude that wave Y is kind of like completed right now. So prices has been, the S&P 500 has last Friday has already broken above 3813.30. With a bullish kind of like reversal, confirming the long leg doji over here. But however, longer term wise, we believe that resistance one at 4,101 and 4,446 will be the next likely resistance that we'll be looking for ourselves. So right now we can see that short and mid term, we are likely looking at a mid-term rebound going forward. Let's dive in. But what is the shorter term right now? So we believe that the next level we should be focusing on is 4,000 level before embarking downside to test a support at 3,007 or even lower at the support at 3306.82. So let me plot it out. and we could see that 3360.32 will be the next level that we should be looking at for the next rebound over the shorter term. Now diving into the Ichimoku, I know most of this is a bit new, and we could see that it's kind of delivering the same message as the moving average and the price action that we shown earlier on. So for the Ichimoku, we could see that prices, the move for the S&P 500 is largely still bearish, despite the fact that Tenkan-sen has already recently rebounded, because this is a shorter time span, so that any adverse reaction, there is a strong adverse reaction to it. But we're going to see that the next mean reversion, a shorter term mean reversion, nearing to our 4,000 level and the 3,900 level, is going to be very tough right now. And the 4,000 level which we are looking at is nearing to the Senko-CIMB resistance level. So this resistance level is highly to be watched out for, as there may be a selling occurring going forward. So for shorter term, even shorter term, we could see that the next support as support by the Ichimoku is at 3712. This is a very short-term support level which confluence with this level of the lagging span highlighted in black. Okay, so in summary, all in all, we could conclude that any short-term upside is actually a reaction to the dominant bearish trend and bearish down move. So right now, the best move is to adopt a wait-and-see approach at the key support and resistance level mentioned earlier on. So with that, that's all for today. I will see you all for the next episode. Any comments, please put it out below, and I'll see you for the next episode. Thank you and have a great day ahead. Goodbye.